Today we are going to talk about CoreWeave, its past, its future, and what it can tell us about the hyperscale AI clouding business. Keep in mind that this video was created by an AI. The details are in the video right now and in the description.
It seems like everywhere you look these days, everyone's talking about AI. It's the next big thing, right? And the investments, wow, they're just pouring in billions and billions and billions of dollars. But I gotta admit, sometimes I wonder, does all this investment, all this hype, is it actually, is it leading to anything concrete? Are we seeing real results, real returns? I bet some of you out there are thinking the same thing.
Yeah, no, I think that's the question everyone's asking. I mean, you see the headlines, right? The crazy valuations, everyone's promising this revolution, but trying to figure out what's really happening, especially, outside of the big tech giants, it can be tough.
Yeah, for sure. And that's what makes CoreWeave so interesting. They just had their IPO on NASDAQ. The ticker is CRWV. They're not exactly a household name, I'll grant you that. But their story, and especially their IPO filing, it gives us this really rare glimpse into how the whole AI infrastructure thing actually works. You know what I mean? It's like peeking behind the curtain and seeing the engine that's driving this AI explosion. We did a deep dive for this one, folks. Went through a ton of reports, financial news, even CoreWeave's own IPO filing.
Yeah, and what's really wild is that they didn't even start out as an AI company. I mean, their roots are in something completely different.
Right. We got to go way back to 2017. Back then, they were called Atlantic Crypto, and as you can probably guess, they were all about cryptocurrency mining. Specifically, they were mining Ethereum, and their secret weapon, GPUs.
It's exactly GPUs, or graphics processing units. Now, for the folks who might not be super familiar with these things, GPUs are these specialized chips. Right? They were originally designed to render graphics for video games and stuff, but they turned out to be really, really good at the kinds of complex calculations you need for mining cryptocurrency, and also, and this is the key, for the heavy lifting that powers AI.
And then, well, I'm sure you remember the crypto market kind of went, it went belly up in 2018. So a lot of companies went under, but not CoreWeave. They did something pretty clever. I got to give them that. They saw that the demand for high performance computing, it wasn't just about crypto anymore. Video rendering, AI model training, all that stuff was taken off.
It was a smart move, definitely. They took this, this challenging situation and turned it into an opportunity. You got to respect that.
Totally. And it's also worth noting who was running the show during all this. The three co-founders, Michael and Trader, Brian Venturo, and Brandon McBee, they all came from, get this, the world of commodities trading. Wall Street guys, not your typical Silicon Valley types. Trader's the CEO now, Venturo's the CTO, and McBee's the CSO.
Yeah, just show you how fast the tech world changes. And how, certain skills like understanding markets, managing risk, making big decisions, those things can be applied to pretty much any industry.
It's wild, right? And their early days, man, they sound like something out of a startup movie. They started with one single GPU just sitting there on a pool table, and then they moved their operation to, I kid you not, someone's grandfather's garage. That's some serious bootstrapping right there.
It really shows their resourcefulness, building something from nothing. That's the heart of entrepreneurship.
Absolutely. And here's another thing. Back in those early days, they were offering their computing power for, get this, 80% less than the big cloud providers. That's a huge advantage right off the bat.
Oh yeah, for sure. It either means they found some serious inefficiencies in the market, or their crypto background gave them a big cost advantage. Either way, that pricing strategy was it was a brilliant move to attract early customers.
Okay, so now let's fast forward a bit to, say, 2022, 2023. AI is exploding, right? ChatGPT comes along, and suddenly everyone and their dog needs massive computing power for these super complex AI models. And guess who happens to have a ton of the hardware everyone's scrambling for?
Right place, right time, right. Their bet on GPUs paid off big time.
And they snagged some big clients too, like Stability AI, the folks who created Stable Diffusion. But they didn't just sit back and relax. They kept pushing. They expanded like crazy. In 2022, they had 3 data centers in the US. Then in the summer of 22, they drop a cool $100 million on NVIDIA H100 chips. Now, these aren't your everyday GPUs, right?
No, not at all. The H100 is specifically designed for AI. It's got all these special features that make it way more efficient for training large language models and doing other advanced AI stuff.
Okay, so they've got the hardware, they've got the clients, but they're also thinking about the future. In October 2022, they launched this accelerator program. Basically, they're giving compute credits and resources to AI startups. Smart move. Yeah.
Totally. It helps the startups because who doesn't need more computing power, right?
Yeah.
And it helps CoreWeave build relationships with potential future customers.
It's like a win-win. And the scale of their expansion, it's mind-blowing. In 2023, they laid down 6,000 miles of fiber optic cable. That's enough to stretch from New York to London and back.
That's a lot of cable.
Yeah.
And it shows how fast they're growing. They need that infrastructure to keep up with demand.
Then there's this really interesting thing they did in August 2023. They raised $2.3 billion in debt financing, but here's the kicker. They used their H100 GPUs as collateral. Now, that's not something you see every day.
It's a pretty unusual move, but it shows how valuable those chips are. They're basically like gold in the AI world.
It's crazy, right? And their valuation, forget about it. It just kept going up. By May 2023, they were worth around $2 billion. Then, in May 2024, after a huge funding round, boom, $19 billion. And then by October, it was up to $23 billion. Investors were throwing money at them.
Yeah, the market was going wild for AI companies, and CoreWeave was, they were right in the thick of it.
Even NVIDIA jumped in, investing $100 million by August 2024. That's a big vote of confidence, right?
Yeah, definitely. NVIDIA is the leader in AI chips, so that's a pretty big deal.
And they didn't just focus on the U.S. They announced plans to invest $1 billion in U.K. data centers. They opened a London headquarters. They were going global.
Smart move. You got to go where the market is.
In June 2024, they tried to buy another high-performance computing company, Core Scientific, for $1 billion. The deal fell through, but it shows they were looking to grow even faster.
Yeah, acquisitions are a quick way to scale up. Sometimes they work, sometimes they don't.
And even though that deal didn't happen, they were still one of the first to get their hands on NVIDIA's brand new Blackwell hardware in November 2024. They're always on the cutting edge.
Got to stay ahead of the curve in this business. New hardware means better performance, and that's what customers want.
Okay, so all this leads up to the big event, the IPO. In November 2024, they had a secondary share sale that kept their valuation at $23 billion. Then, in March 2025, they filed their Form S-1 with the SEC. They're going public, ticker symbol CRWV.
Going public, that's a big step for any company. It gives you access to more capital, but it also comes with a lot more scrutiny.
Right. And the S-1 filing, it revealed some interesting stuff. For example, in 2024, over 60% of their revenue came from Microsoft. That's a lot of eggs in one basket.
Yeah, it's a bit risky. What happens if Microsoft decides to go in a different direction? But it also tells you something about the AI market. It's still early days, and a lot of the demand is coming from a few big players.
Right, right. And speaking of big deals, they acquired an AI platform developer called Weights and Biases in March 2025 for about $1.7 billion. They're not just about raw computing power anymore.
It's a smart move. They're expanding their offerings, becoming more of a one-stop shop for AI development.
And then, boom, the big one, a 5-year, $12 billion contract with OpenAI. This is huge, folks. OpenAI is the company behind ChatGPT, so they need a ton of computing power, and CoreWeave is going to provide it.
This deal is a game changer. It secures a massive revenue stream for CoreWeave and makes them a key partner for one of the most important AI companies in the world.
And as part of the deal, OpenAI took a $350 million stake in CoreWeave. They're really tight now.
Oh, yeah. It's a deep strategic partnership. They're in it together for the long haul.
So the IPO. They were initially planning to raise $2.7 billion, but then they scaled it back to $1.5 billion. They went public on March 28th, 2025, and raised the money. It was still the biggest AI IPO ever, by the way.
It was a bit of a bumpy ride, though. Investor demand wasn't as strong as they hoped.
And guess who stepped in to save the day? NVIDIA. They bought a bunch of shares at $40 apiece, stabilizing the price. Brian Venturo, the CTO, he even said that the company has always found a way to overcome challenges. They're fighters, these guys.
It shows the strong relationship between CoreWeave and NVIDIA. They're more than just customer and supplier. They're partners.
It's pretty amazing to think about. The co-founders, they're now worth like $5.3 billion on paper. They have 250,000 NVIDIA GPUs spread across 32 data centers. And it all started with that one GPU on a pool table.
It's an incredible story. They saw an opportunity, they took risks, and they executed. It's what entrepreneurship is all about.
Michael Intrater, the CEO, he said that they're building a Lamborghini, not a minivan. They're all about speed, performance, the best of the best.
That's a great analogy. It captures their focus on high-performance computing. They're not trying to be everything to everyone. They're targeting the most demanding AI workloads.
And it's funny, right? Intrater and Venturo, they used to be carbon traders. They made a killing in that market. And that experience, I think, it really prepared them for the wild world of AI.
Yeah, both markets are fast-paced, high stakes. You got to be able to think on your feet. It's a different kind of expertise, but it definitely translates.
Okay, so let's talk a little bit about their infrastructure. It's built on something called Kubernetes. Now, I'm not a techie, but from what I understand, Kubernetes is like this super smart system that manages all their GPUs. It makes sure everything runs smoothly, even when they're dealing with these massive AI models.
Right. It's like an orchestra conductor coordinating all the different instruments to create beautiful music.
Yeah.
In this case, the instruments are GPUs and the music is AI.
Nice. And their data centers, they're everywhere. They lease 32 data centers now, up from 15 in 2024. They're building a new one in New Jersey for $1.2 billion, and they're building a dedicated supercomputer for NVIDIA in Texas for $1.6 billion. That one's going to have over 3,500 H100s. It's going to be the fastest AI supercomputer in the world.
They're going all in on infrastructure. It's expensive, but it's necessary to meet the growing demand for AI computing.
Okay, let's talk money. In 2024, they brought in $1.9 billion in revenue. That's a 737% increase from the year before. But they also had a huge depreciation expense, $863 million.
Yeah, depreciation's a big factor in this business. Those GPUs, they're expensive, and they lose value over time. It's like buying a new car. It starts depreciating the minute you drive it off the lot.
Right. But even with that huge depreciation, they still managed to turn a profit, $324 million in operating profit compared to a loss in 2023. That's impressive.
It shows their business model is working. They're making more money than they're spending, even after accounting for the depreciation of their assets.
And their projections for 2025 are even better. They're expecting $3 billion in revenue and $451 million in operating profit, even with $1.5 billion in depreciation. They're on fire.
It's a clear sign that the AI market is booming, and CoreWeave is positioned perfectly to capitalize on that growth.
But it's not all sunshine and roses, right? There are risks. Depreciation costs could rise even further, revenue growth could slow down, and they have a lot of debt. Over $7 billion.
Yeah, there's always risk in any business, but especially in a fast-growing, capital-intensive industry like AI. CoreWeave is making big bets, and those bets could pay off big time, but there's also the possibility that things could go wrong.
Right, right. And they're very dependent on NVIDIA. Some analysts estimate that CoreWeave accounts for 6 or 7% of NVIDIA's total revenue. That's a pretty close relationship.
Yeah, it's a symbiotic relationship.
Yeah.
CoreWeave needs NVIDIA's chips, and NVIDIA needs CoreWeave to buy those chips and put them to use. If one company stumbles, it could affect the other.
And then there's the OpenAI deal. Sam Altman, the CEO of OpenAI, he's been very vocal about how important CoreWeave is to their work. That's a big endorsement.
It's huge. OpenAI is one of the most innovative AI companies in the world. Their success is partly due to CoreWeave's ability to provide them with the computing power they need.
So what have we learned from all this? What are the key takeaways?
Well, first of all, CoreWeave's story is a testament to the power of adaptability. They started in crypto, then pivoted to AI, and now they're one of the leading players in the AI infrastructure space.
Right. And their financial performance shows that there's a lot of money to be made in AI. It's a high-growth, high-profit potential market.
But it's also a high-risk market.
Yeah.
CoreWeave has a lot of debt. Their success is tied to NVIDIA's success, and they're dependent on a few big clients.
Right, right. And their IPO, it gives us a better understanding of how the AI infrastructure market is valued. Before CoreWeave went public, we didn't really have a good benchmark.
It's a valuable data point.
Yeah.
It shows that investors are willing to pay a premium for companies that are well-positioned in the AI space.
So here's a final thought for you. CoreWeave is closely tied to NVIDIA, Microsoft, and OpenAI. What does that tell us about the future of the AI ecosystem? Who's going to have the power? What other partnerships or alliances might we see? It's a fascinating time to be watching this industry unfold.
I agree. There are so many moving parts, so many possibilities. It's hard to predict what's going to happen next, but it's definitely going to be exciting.
All right, folks. That's all the time we have for today. Thanks for listening.
Thanks, everyone.